Hello and welcome to Pro Trader Strategies Market Commentary for Friday, March the 10th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Unenjoyment Friday, finally, here we have it. And here in the United States, we got hourly earnings came in a little bit lower than expected at 0.2%, was expected to be 0.3%, but a surprise to the upside was the non-farm employment change with a 235,000 person increase. So 235,000 people came off of unemployment or were hired in a sense. It was expected to be 196, so it really kind of did very well, and they revised last month's up as well to 238,000. Unemployment rate did not change at all, but as people get hired, people that were discouraged workers, which means they kind of fell off that unemployment number, are actually now probably starting to look for employment and filing for unemployment claims. So that number hasn't come down despite the fact that we saw a bigger than expected hiring spree there. Then on to the overall markets. We've got crude oil down again today, down 34. I just can't see it not coming down to this $37 and like 50, 60 cents. I think it just has to come down there and at least hit that Fibonacci level, even though it doesn't really line up with any major number for or support level for the market profile. That is a low volume node, so sometimes the market can come down to those low volume nodes and fill those in to create a nice big bell curve. So I still see it wanting to probably, if it blows through that line, it's going to definitely go to the point of control, which is that $45.80. So keep those two levels marked on your calendar or on a sticky note, something like that. But I just can't see crude oil really being able to hold itself up until it at least hits that level there. So if you are a bear and are already short this market, that'd be where I'd be looking to get out for sure. At least part of them at that 47.60 area, and then the rest of them maybe at that 45.80 area. So on to gold. Gold down just slightly on the day, $3.50. Now I've been short gold on this entire rally. It feels like I only have like 7 more days. I need a bit more of a pullback in there because I have a long put spread that was out of the money. Was a pretty big, looking like a full loser. So if I can get just a little bit more pullback in that, I will be happy with my GLD trade. Then the bonds taking a bit of a rest here, creating a new 52-week low again as we got good economic data there. It's almost a sure thing for the Fed to raise 25 basis points at the March meeting or at this meeting coming up. Looks like bonds just aren't going to be able to, get out of their own way in a sense. I think it's already priced into the bonds. It's definitely already priced into Fed Fund futures. So it could just kind of slowly trickle off here because it's, already baked into the cake, if you will. Dow Jones Industrial Average up about 17 points, but well off its highs. We kind of rallied. The overall markets rallied overnight on that data point for the non-farm payrolls. The markets really spiked, but then it kind of was like, buy the rumor, sell the news. We got the ADP numbers looking like they were going to be pretty good, which reflected the non-farm payroll pretty good this month. And the overall market rallied, but then the realization, I guess, that the Fed is going to start ramping up this whole Fed interest rate increase, or that it is really on the docket for the future. The markets have kind of really started coming off of their highs rather quickly. Then we got NASDAQ. It's actually one of the few ones that is holding its own. I mean, it's not quite given back half of its gains from that announcement, but they're still up about 16, 15 points right now. Then if we look at the E-mini S&Ps, the E-mini S&Ps, as you can see here, they're the ones that are really starting to show a technical pattern that I look at. It has a tendency to be a continuation pattern. Anytime you start seeing these dojis that are pretty massive, yesterday's rally at the end of the day kind of made this doji look like it was a continuation pattern to the downside. Now we've got another one right there, so 3 of them in a row. One would assume that kind of means a continuation of what we've seen. So right now it's really kind of deciding which direction it wants to go. So it needs a confirmation. We're not really getting any type of confirmation, and not enough of a confirmation to really trade off of. But that being said, here is the 30-minute chart of the E-mini S&Ps on a 10-day expansion there. This has the overnight rally going into the market, and as you can see, printed it right on the release of that economic data, but this was also in the overnight session because the equities don't open until an hour later than when this is released. But you can see quickly as the market kind of digests that number that we've kind of sold off to where we are now, but just slightly off of the lows of the day. So overall market really trying to see if it wants to throw a tantrum about what the Fed's done. So anyway, on to what I've done with Citi. Citi has worked out like, you write a book about kind of thing, like how you set up a poor man's covered call for Citi. Now, if you remember, I did this a few months ago and did this as a poor man's covered call, I should say, and did the September 45 calls that I bought and then sold 60 calls to finance them in the February. In the February. And what I've done is rolled those up Febs to the March, those short 60 calls from the Feb to the March, and then I rolled them up and out. So I rolled the Feb 60 calls to the March 62.5 calls. I was able to collect 16 cents for that. The original 60 calls that I sold in February, I was able to finance all that extrinsic value. So what I owned there was pretty much intrinsic value. Now I've rolled those up again and out into the April. So I rolled my March 62.5 calls out to the April 65 calls now and collected another 21 cents. So continuing to roll this trade out and up out in time and up in price is increasing my probabilities of success, right? Because now my spread is wider. I've collected more credit, lowered my basis that I paid for that. And if I can continue to get this market direction, then that trade is going to work out very nicely. It's already worked out really nicely as of now. But if the market continues to glide up and if we continue to see the Fed increase interest rates, that's going to do well for Citi's overall bottom line, because higher interest rates is where these banks are going to make their money. So ticker symbol C. So this one's working out really, really nicely. And so are some of my other ones. Kellogg, ticker symbol K. It's not working out great, but I rolled those out in time, trying to lower my basis on that. So get a turnaround. That one will work out nicely too. That was all for that poor man's covered call webinar that we did. Today we're going to be doing a webinar on, it's a little bit of a twist on the long call. We're going to add some risk to that, try and create a credit for that strategy. And when you're increasing your risk, you also increase your reward for this kind of situation. Anytime you increase your risk, you increase your reward, and we're going to try and increase our probabilities of success by doing that. So go to protraderstrategies.com. That's all I got for you today. Can't take that? Take it easy.